Alright, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Sunday Stock Watch, but it's actually the first edition of Monday Stock Watch because today's Labor Day. So happy Labor Day, you guys. I hope you're all having a very relaxing 3-day weekend with your family, friends, loved ones, whoever that may be. Cheers and some drinks, eating some good food. You guys know the deal. It's crazy how much longer a 3-day weekend seems than a standard 2-day weekend. It's just one day, but I mean, I guess especially considering how the markets closed out last week, it seems longer than usual. It is nice though. It's refreshing. Break the trend, break the routine a little bit, spice things up. Okay, so that said, although it is a weekend, I'm here for you guys. There's a lot of exciting things to talk about, so as always, we will go over each topic that we're going to be discussing, then we'll dive into each one individually. In front of us, SPY S&P 500 on TradingView, where we will be looking at all of our charts today. So SPY, again, you guys, the Nasdaq, the Dow, it's all pretty much the same thing. Not the same thing, but you know, they'll act pretty similarly. I do think, as I'm sure you could assume by these arrows, I do think that we're going to see a pullback in the markets this upcoming week. We could see a bounce on Monday or Tuesday. That's why there is this little line right here. We could see a bounce, but I'll tell you guys right off the bat, if we do see a bounce in the equity markets, I'm picking up even more puts than I have right now. Okay, so excited to get into you guys about this. We will touch on gold, silver, Bitcoin a little bit, and we have a lot of fun articles to go over as well. Okay, so the first thing, this isn't an article, but this is a complimentary little analysis on TradingView. I just want to show you guys this because it's an interesting perspective once again on the SPY. So this works out perfectly. Again, this is very interesting. It is titled "Every Pro Trader I Know is Watching This." So I mean, I don't know what the validity of that is, but hey, if every pro's watching, I want to share it with you guys. So we'll take a look at that just once again to complement the charts that we're looking at. We will then move into some articles. Downbeat U.S. executives dump most stock in a month since 2015. So once again, this is just adding on to that fundamental bearish argument on top of the technical argument that I'm seeing right now. So there's just a lot of factors pointing to a pullback in the equity markets, in my opinion at least, and we will cover some things that support that thesis. We will then move on to some earnings. Okay, so these could go both ways, and there's definitely some big earnings reports in here, you guys. Once again, as we always do with these earnings, I'm not going to spend a lot of time really analyzing each one. We will go down the list. I'll let you guys know what is reporting earnings, what companies are reporting earnings, what dates they are reporting, and I'll just give you guys some brief thoughts there, but there's some big ones in here, so I'm excited to share those with you guys. We will then move on to U.S. cases tick up amid specter of Labor Day surge, virus update. Okay, so this is kind of playing into what I want to talk about, biotechs, COVID-related biotech specifically. If you guys have tuned into the channel before, you know that we spent a lot of time covering that sector. It's been a rough few weeks for that sector. So it would be nice to see if they can once again, as the equity markets, primarily like the sectors like the tech sector that have been seeing so much gains over the past month or so, as they pull back and capital flows out of those sectors, that they flow into sectors that may seem more promising, may seem like a better place to park your capital than tech right now. Okay, so that's kind of what I'm betting on. I'm going to be honest, that is kind of my bet in some of our blockchain related plays too that we talk about here on the channel, like Riot and Mara. I do think that as capital flows out of the tech sector, primarily, again, the tech, just because the tech sector has been blowing up so much, that as capital flows out of sectors like that it will flow into other smaller sectors that haven't been seeing as much love and could potentially act as almost a hedge to those larger sectors. Okay, so we will talk about this again, you guys. This is just kind of playing into my argument for those COVID related biotech specifically. After that, again, speaking of things that have just been taking market share over the past week, or past few months, I'm sorry. Tesla falls after S&P 500 adds Etsy and 2 others bypassing car makers. Okay, so we did cover this in the stock talk on Tesla and Workhorse. If you guys did catch this in more detail in terms of the S&P 500 at least. So Tesla didn't get added to sum it up, but I do want you guys to keep an eye in terms of like a stock watch. We will talk about Tesla, of course, because for those of you who don't know, I am currently short Tesla. But Etsy, Teradyne, and Catalent were added to the S&P 500 index as well. So we'll see how those do next week, especially if the market, the greater markets do turn down. If these happen to perform, then that might be a very bullish sign for each of these. I personally really like Teradyne myself. It's not, for full transparency, it's not a part of my portfolio at this moment, but it's been on my watch list for a long time. So maybe I will make a solo episode for Teradyne in the future, but we'll have to see. Anyway, keep your eyes peeled for these Etsy, Teradyne, and Catalent. All right. Staying on the Tesla train. Sorry to kick them while they're down, you guys, but I think it's just important to understand the bear argument here. Tesla could be the most dangerous stock on Wall Street, investment researchers says. So I agree with this. I've agreed with this far before I've read this article. I thought this from almost the initial run up, and especially at this point, I think Tesla is by far the most dangerous stock on Wall Street, just because there's so many new traders involved with that freaking stock. And when it starts to fall, I think it's gonna fall hard. Like People who are buying these Tesla moon boys that I talk about, I don't want to roast the Tesla moon boys. I've been a moon boy in the past. I know what it's like, but it's just new traders. When you have new hands, new inexperienced traders, and so many of them involved with the stock, even like when they see red, they will panic at some point. At least the majority of them will, and that will cause a snowball effect, and that's what I'm thinking is going to happen with Tesla. Keep in mind, guys, it could absolutely not play out. Tesla could just keep ripping like it has been. But I do think that we will see a significant pullback in Tesla. And again, we will go over some of these fundamental reasons that I'm bearish on Tesla on top of the very bearish technical argument that I have as well, okay? And of course, as we go over all of these, we will take a look at the charts as well. I also want to talk to you guys about VIX. So VIX and the Vixy, the volatility index. The VIX thrives in market environments that see blood. Okay, so when there's blood in the water, Vixi is a shark that comes up and eats all that up. So Vixi thrives. Vixi and the VIX is been one of my favorite plays in the portfolio for a long time. Again, if you guys are part of the portfolio newsletter, you would know that I'm extremely bullish on the VIX right now. So we will get into that as well. I'll let you guys know what I'm seeing on that chart. And just speaking of the newsletter, segue right into the plug. As always, you guys, if you do go on to gain value from this video, I'd really appreciate it if you gave it a like. Subscribe to the channel if you're new around here and want to catch more content like this, and of course check out my complete portfolio daily newsletter, first link in the description. If you want to know my exact trades, all call options, all put options, all stock positions, all cryptocurrencies, in my entire portfolio, literally exactly as it states, first link in the description. Along with that, I do send out an email newsletter every trading day during market hours talking about the trades I made that day, rationalizing my thoughts and giving you guys my updated thoughts on the markets at the time. Okay, so again, first link in the description if you're interested. If not, no worries at all. Let's get into the charts. So again, you guys know, especially if you watch my Friday episode, kind of the weekly roundup, where we saw a lot of bloodshed in the markets on Thursday and Friday of last week. Okay, so I do think that just to sum this up quick, again, you guys can go back and watch that, but I'll pretty much just be reiterating what I said there in a shorter way. Pretty much, I do think that we could potentially see a bounce on Monday or Tuesday. I do think that we will test this lower line of resistance. If not on Monday, definitely later in the week. I think for a 100%. I mean, I should never say 100% fact, but I do think that it is highly likely that we do come down and retest this line that was a line of support that it used. It's set back in mid-May. It used once again in June, creating this support line. If we break below this, I'm looking for a quick move down to these previous high levels. So you got, I mean, this is just TA 101 right here. When you see a rally start pulling back, it's very common to see it pull back and correct back down to previous highs. So it did set this high back here in early June. I think it's extremely likely that we see a pullback back to these areas if it does break this line of support, and it could potentially go even lower. So that's where this comes into play right here. And remember, you guys, this is the SPY, but a similar pattern will apply to the NASDAQ, to the Dow, whatever index you're looking at. Okay, so this is, I'm not going to try to say his name, but this is a solid little thing. Every pro trader I know is watching this. Okay, so this is a megaphone of the SPY. So this is pretty much a megaphone pattern. I'm sure you guys can understand why it's called a megaphone pattern, because it looks like a megaphone. Okay, so just a quick technical note to add to my previous SPY breadth idea. Lots and lots of my former colleagues are watching this megaphone play out right now, and depending on the price action resolves, it will likely confirm one of the two narratives. Either way, we are due for another crash given the bleak macro picture, or that we will continue higher as the ISMs indicate improving business sentiment and a bottoming of fundamental COVID risk worth watching. So this would be very extreme if we do end up pulling back to these previous highs, or not previous highs, to the bottom side of this megaphone. Okay, so that would be crazy if, but it also does line up. Let's see here. This, if we do happen to say we reach it somewhere around this area, it would bring us to just call it like the $210 mark. Let's see where 210 brings us. So 210, we did break. We didn't quite break 400 on the SPY, but it would bring us back down to 210, which is pretty low. But I wouldn't be surprised if that brings us down to, if this ever loads, sorry about that. So previous highs, I wouldn't be surprised. 210 might be a little extreme. I mean, but again, you guys, the macro picture is so bleak right now in terms of the economy. And again, you guys, the stock market, economy, I can't say this enough, are completely diverged at this point. The stock market is very different than the tragic reality of the U.S. economy right now, and the global economy, to be honest. But if the economy does actually catch up to the markets at some point, I think it can be extremely bleak. I wouldn't be surprised at all to see a 210. Okay, so once again, you guys, the megaphone is looking like that, as we saw here. Again, you guys, it would be very bleak, but it wouldn't surprise me at the same time. Okay, a 50% retracement, roughly a 50. It would be more of like a 40% retracement from its current highs. Again, you guys, in such a terrible economic environment, wouldn't be surprising at all. Okay, so speaking of that, speaking of bad fundamentals, let's look at this. So downbeat U.S. executives dump most stock in a month since 2015. Record-breaking equity rally encourages company executives to cash in. U.S. executives sold $6.7 billion of stock, that's a lot, in their own companies last month, cashing in on a record-breaking market rally with the biggest burst of selling in 5 years. The dollar value of sales by 1,042 chief executives, chief financial officers, and company directors in August topped any month since November of 2015. That's never a good sign, according to figures compiled for the Financial Times by Smarter Insider, a data provider. The number of executives selling was the highest since August of 2018. That was right before a significant pullback. If you guys were around in 2018, that winter in 2018 was a rough one. The deals show insiders have taken advantage of the rapid run in U.S. stock prices since the lows in March, when the COVID-19 pandemic tore through the global capital markets. Okay, so this is bad news, you guys. As always, like, it makes sense. If I was one of these executives, I'd do the same thing. The reason they're doing this is because they understand the economic reality of how terribly their companies are performing and how disconnected their stock price is from the actual reality of what they're doing financially. Okay, so I say this about so many of the stocks in the market right now, you guys. Everything is so overvalued. If you looked at the PE ratio that I brought up many times in the past, I don't have it right now, but although the S&P is floating around like all-time highs, the S&P in regard, like in terms of price to earnings, so like fair value is off the charts. So it's ridiculously overvalued right now from a price to earnings fair value perspective. So just keep that in mind, you guys. That's dangerous. Let's go over these earnings real quick. Again, you guys, I'm not going to spend too much time on these because we can definitely spend a lot of time on these, but I will just go through them quickly, give you guys my quick thoughts on the companies. All right, so 7 earnings to watch next week. We got Coupa Software, Slack Technologies, Lululemon Athletica, American Eagle Outfitters, Chewy, Peloton Interactive, and Kroger. So let's scroll down here. Coupa Software, this is a cloud computing thing. I mean, cloud computing has just been similar to like semiconductor companies. Like they've just been in a territory of their own, just taking names, really doing well. So it does scare me just because they're at all-time highs and they've been doing so well that these guys are going to need to any play within this sector, in my opinion, that's seen a significant rally over the past couple months is going to need to really impress if they don't want to crash. But if they do, especially if the greater equity markets pull back and these guys don't absolutely blow people away with their earnings calls, then I think that they're going to see some red for sure. So earnings report date, Tuesday, September 8th after market close. Let's move down here. Slack Technology. So Slack, I mean, very Corona economy stock, right? Slack is a good platform. I think it does serve a purpose, and it would be interesting to see. So it trades at only 15x forward revenue, with profitability not expected until 2022. So that's pretty bad. Right now in this economic environment, you do want companies with strong balance sheets. So that's not a good sign. But again, Slack is I like the platform. I've used it many times in the past, and I think it's cool. But I'm not trading it myself. You guys, I will let you guys know that I'm not trading any of these except for one that I think we're talking about next. But Slack does report earnings on Tuesday, September 8th after market close. Let's move on to Lululemon. This is the one I'm talking about. So Lulu announces earnings Tuesday, September 8th after market close. So Lulu, for a brick and mortar athleisure company, is so like at absolute highs right now. If you look at the charts on Lulu, I do have it somewhere. Shoot, I don't see if I can find it. I know it's somewhere around here. If we look at the charts on Lulu, it's absolutely insane. Like, you guys, Lululemon is so ridiculously, I don't know. Here, wait, I'll just add it right here. So Lululemon, you guys, for again, brick and mortar athleisure, all of their brick and mortar stores are closed down, and they look like this. That's insane, you guys. That, like, look at that. Back in March of 2018, they were at $77. They've now 5x'd since that point. And I can guarantee you that their financials, that their, like, just their place in the ecosystem. Obviously, athleisure is a big sector that is growing. More people are getting athletic. Less people are going to the gyms. That's a fact. People are exercising, though. But, I mean, you guys, Lululemon, the fact that they have 5x'd in 2 years that doesn't make any sense, especially considering all of their brick and mortar is closed. Okay, online sales are up. Literally every company on earth's online sales are up because it's their only form of sales. I hate that argument, and I've heard that argument many times. So I will very likely be shorting Lululemon. I'll let you guys know that right now, because I do think that they're going to disappoint on earnings. I don't think that their current financials at all warrant their current share price. Okay, so once again, you guys, I don't know exactly what's going to happen. This is just, I mean, it just makes sense to me personally. All right, so that said, that is Lulu. Let's move on to American Eagle. I mean, American Eagle is sold. I don't know anyone who's ever bought. I haven't even seen their website before. Again, this isn't really my my preferred area to shop personally, but I mean, American Eagle, kind of along with malls, I think it's a dead industry, and these poor guys are probably not going to do too good. Chewy, I mean, people love their pets. I think this is trending in the right direction. I think Chewy, I'm not sure what Chewy's valued at. They did IPO last year, I believe, so they're a fairly new company to the equity markets, to the public markets, that is. I don't know. I don't really have much to say there, but if you guys are interested and love your pets, go check out Chewy, okay? So that is Chewy. Let's move on to Peloton Interactive. Peloton is another almost in the same lane as Zoom, so very Corona economy stock. Peloton, obviously, they target a very wealthy, high nose demographic, if you want to say that. But I think they are releasing a cheaper bike. It's good. That's what they're going to have to do if they want to scale. Peloton, I believe in them long term. I think it's a great concept. I think it's a good product. I think the company personally is overvalued right now. I'm not shorting it, but I think Peloton is extremely overvalued at this moment, as far as their financials are concerned, at least. Kroger, it's hard to think that these guys aren't doing too good. Everyone still needs groceries, and everyone's buying, stocking up more than ever. I have to assume still, I really don't have anything insightful to say for Kroger, so I'm just going to skip that. But keep your guys eyes out if you are interested in playing that one for yourself. And then that's it. So those are the seven earnings, you guys. Remember, just keep an eye out for those if you want to play them. I'm not playing them personally, aside from maybe Lulu. It's not even position. I'm not positioned in that yet. But we'll see how Monday plays out. Maybe I'll pick up some puts. All right, so that said, let's move on to U.S. cases tick up amid specter of Labor Day surge. Virus update. U.S. coronavirus cases trend higher heading into the Labor Day weekend, which has triggered concern in President Donald Trump's administration and among state officials about another potential surge. Democratic vice presidential nominee Kamala Harris said she wouldn't rely solely on Trump's word of efficacy of a coronavirus vaccine. Makes sense. China said passengers arriving on flights from the U.S. will have to show negative COVID-19 tests starting September 15th. Mexico is ordering an extra 1.1 million death certificates after supplies ran out. That's super sad. Italy reported its most new cases since May 2nd. So remember, you guys, initially Italy was like the hot spot on earth. Italy was in the worst place. So it sucks that they're kind of trailing back now that everything's opened up. I mean, Europe is partying. Europe is a party right now. But this is what you're going to see if you want to party, all right? So everything's a trade. Everything is a trade. Though Prime Minister Giuseppe Conte pledged to avoid another nationwide lockdown. And again, you guys, that's at this point, I'm personally not. I don't think lockdown. It's insanity. Okay, so that's what's the saying? The definition of insanity is doing the same thing twice with the expectation of a different result. If we try a lockdown again, which we're doing in Hawaii, kind of right now, like beaches are locked down on freaking Labor Day. When you lock down beaches, where do people go? They still want to party. They're still going to party. They go inside. You freaking local government idiots. This pandemic really shines a light on how important your local government is. Okay, so I'm so not into politics in the least bit personally, but it does make you think. Like, you want to put a little more care into making sure that your local government, and obviously your federal, national government as a whole, isn't completely incompetent, which is a lot of people are proving to be right now that are in positions of power. Okay, so again, it sucks, but from a stock perspective, sorry for that little rant, I do think that we could see a little bump once again. If this sector will have to prove to me that it is able to act as a hedge. Okay, so you can see Moderna, Sorrento, really just, it's crazy to see how low Sorrento's gotten. So we'll take a quick look at Sorrento just because I know so many of you have been asking about this. I mean, these arrows, man, I don't know about these arrows. Sorrento hasn't been releasing the most good news. And I mean, you guys, like this sector of all of them works in news cycles. Okay, so you get some good news, stock runs up, the bubble pops because something happens or the news just fades out, which it does with all news. Like, so much is being barraged at us in terms of news now that we just forget. Okay, so these companies are actually still making progress. Moderna, Moderna is facing some really bad optics right now in terms of their CEOs selling stock. Like, again, all executives know that their companies are overvalued right now, and I would do the same thing, to be completely honest. And it does look bad if they're selling the load of stock, because maybe they know that their vaccine isn't great. So that's obviously something you have to consider. I don't know if that's the case or not. I don't know the fair argument from Moderna's side. But that said, nonetheless, you guys, this entire sector, it's not just Moderna and Sorrento. It will be interesting to see if, again, with this resurgence in COVID cases and potentially the big sectors like tech, again, that have been seeing so much love over the past month or so, bleed out a little bit, see some capital flow out of those sectors, and we'll see if it flows into other sectors like this one, which will obviously make this a hedge, so a direct hedge. This will be non-correlated to like the tech sector. But again, I can't say, the reason I'm kind of stuttering right now is because I can't say that with any confidence. It has happened in the past. I'm hoping that it will happen again, obviously because I am positioned. You guys know, many of you guys know that, but we'll just have to see how the cookie crumbles with this one, okay? And as always, I will keep you guys posted. We will do a stock talk later in the week in regards to this sector. All right, so that said, let's move on to Tesla. Tesla falls after S&P 500 adds Etsy and two others bypassing CarMaker. So once again, you guys check out Etsy, Teradyne, and Catalent. Those are definitely stocks to keep an eye on. But again, Tesla was seen as a candidate for inclusions after reporting its fourth straight profitable quarter, but they were not introduced to the S&P. We did cover that. I'm not going to spend too much time there. But again, you guys, Tesla could be the most dangerous stock on Wall Street, investment researcher says. So the analyst, I always say everyone's biased. I have my biases. Whoever you watch on YouTube, whoever's articles you read, everyone has their own underlying biases. Even if they may not admit it, everyone has a bias, okay? And right now, I'm personally biased on the bearish side for Tesla. But there's many people who still believe Tesla will go up. I'm personally a short-term Tesla bear. And again, I'm sorry if you guys are bullish on Tesla, like a perma bull on Tesla, that's fine. That's not me. Tesla shares may be up 400% this year, but one investment researcher is sounding the alarm on the stock. New Construct CEO David Traynor calls Tesla the most dangerous stock on Wall Street and says the fundamentals do not support the high price and valuation. Whatever best case scenario you want to paint for Tesla, for what Tesla is going to do, whether they're going to produce 30 million cars within the next 10 years and get the insurance business and have the same high margins as Toyota, the most efficient car company with the scale of all time. Even if you do believe all that is true, the stock price is still implying that the profits are going to be even bigger than that. So again, best case scenario, this current stock price is implying that it's going to be better, significantly better than even the best case scenario. He notes that the stock price is implying anywhere from a 40 to 100% market share based upon average selling price. At its current average selling price of $57,000 and assuming 10.9 million car sales by 2030, that implies 42% market share, Traynor says. Tesla trades at 150 times forward earnings. So again, Tesla's PE ratio is off the freaking charts. It did correct a little bit, so it might be a little lower than 1,000 now, but it's still absolutely objectively overvalued. We think this is a big, one of the biggest of all time, houses of cards that's getting ready to fold, and I feel the same way. I think that's perfectly said. I think, but it's the same thing as a bubble, you guys. Bubble, house of cards, whatever you want to label it as. And again, you guys, the most gains I've ever made in my career over and over again have been bubbles, just spotting a bubble, spotting a hype cycle, and capitalizing on that. And on the way up and down, it applies both ways because that's the beauty of being able to short stocks. So again, you guys, I am short Tesla. We will take a quick look at Tesla. We'll just go to Tesla Workhorse as well. You guys, I'm bullish on Workhorse. That's why I labeled the video yesterday, the bear and the bull. Like I'm bearish on Tesla, although these both are in the EV categories. I'm personally very bullish on Workhorse. It only has a $2 billion market cap, and it's very poised to disrupt a very big industry. And Tesla is just so ridiculously high right now that I can't believe that we don't see a greater pullback than this. Again, you guys, it would make sense. It just makes. I'm very convinced this is going to happen personally. Again, you guys, it could keep ripping. I don't know. Tesla's proven me wrong many times in the past, but it just makes sense to me now that we've pulled back so significantly. We have broken the 21 EMA here. I do think it's likely that we come back again, test these previous highs. And also, it also lines up really nicely on September 5th, at least. It does coincide with this upward line of support. Okay, so it wouldn't surprise me at all to see Tesla bounce off this line of support and its previous high right at the 300. It's about 335. Okay, so I would not be surprised in the least to see Tesla pull back solid like 25%. Okay, but again, you guys, I'm not saying that it will very likely bounce once it hits this area, because again, it does have a strong line of support from both angles, from this upward trend line and from this previous high. So I definitely think that Tesla will bounce off this. If it does come down here, we could play out a massive head and shoulder. So left shoulder, head, right shoulder, and then ultimately come down to these recent highs, which is honestly what I think. I personally think this will happen. Okay, so I'm not going to be surprised within the coming months to see a $200 Tesla. It's still fair. It's still a huge company. It's still a great company. it just needs to correct. That's a healthy part of every market cycle. Okay, so that is Tesla. I do want to show you guys the VIXY. So one more time, we'll close it off with the VIXY. Riot, Bitcoin, you guys know what? We'll take a look at Bitcoin quick because Bitcoin is doing all right now. So we'll take a quick look at Bitcoin and then we'll close off with VIXY because again, you guys, I am excited about VIXY. So Bitcoin, I really, to be completely honest with you guys, it might not do this, but I really just want Bitcoin to drop to this lower support line, just this absolute line of support, this multi-year trend break. So again, this was for years, this thick orange line, that's why it's thick, is because that is what initiated the bull run when it broke that multi-year downtrend. So this was a downtrend from 2017 that it broke. You see, once it broke this multi-year downtrend, you see this rally and you see this recent run up. What was once, again, you guys, TA 101 right here, you've heard me say this many times, what was once a line of resistance will turn into a line of support. So I need to know if it will use this line as a line of support. If it breaks below this line, you guys, I'm sadly very short-term bearish on Bitcoin. Obviously, you guys, I'm a Bitcoin bull. Like many are a Tesla bull, I'm a Bitcoin bull. I believe in the fundamental prospects of Bitcoin for the long term. In a world that is printing trillions of dollars, you want that hard money. You want that just absolutely scarce asset that is Bitcoin, and it's digital. It makes perfect sense. Okay, so I do need to see if Bitcoin will bounce off this. It could, hopefully it will just use this area of resistance because it has used this, just the 10,000. Obviously $10,000 is a huge psychological even, one of the greatest psychological evens. It's rare you see a psychological even like that. So it makes perfect sense that it's using 10K as an area to bounce off of. So we could see, technically, if it does go up from here, it did set a higher low, and it'll probably just continue this trend. Again, you guys, I do still think that we will see a 15K plus Bitcoin by the end of October. It may take a little longer depending on what happens here. Again, if it breaks this lower trend line, then it does make me short-term bearish, and I will have to reestablish some of my thoughts surrounding Bitcoin, which again sucks, but that's just you got to adapt, right? You gotta react appropriately to the reality of what's going on. Okay, so we will cross that bridge if we come to it, but again, you guys, it will be interesting for stocks like Riot and Mar to see. Bitcoin's doing well. We'll have to see if the equity markets tank. I do think that might be bad news for stocks like Riot and Mar that are obviously equities, even if Bitcoin's doing good. But I'm hoping that they act as a hedge to the equities. So again, capital flows out of tech sector, capital flows out of huge stocks. It's going to want to put, investors are going to want to put that capital, they're hungry. They want to invest in innovational things. That's been proven with stocks like Tesla. That's why it's run up so much. But I think that we could see that capital flow out of those stocks and into, again, other more exciting innovational sectors. All right, so that's Bitcoin. Again, we will take a look at VIXY and then we'll call it. Okay, so VIXY, I believe it's at the bottom. Sorry, I'm scrolling all over the place, you guys. VIXY is right. Again, you guys, VIXY is probably one of my favorite plays in the market right now. So VIXY, you see during the March liquidity crisis, this shows what VIXY can do when the markets panic, when the markets see blood. All right, so VIXY went from $10 up to a high of $65. So it's 6.5x during March when we saw the liquidity crisis, when everything crashed. We saw the VIXY specifically 6.5x, okay? And we have since then been in a downtrend. Now that the markets have recovered, we've seen that relief rally in the markets. We've seen this downtrend. It did break technically out of this downtrend at the end of August. Great sign, great news. And I do think that we will see another rally in VIXY. I do think, you guys know the two-wave theory, the good old two-wave theory that I've seen over the entirety of this relief rally that we've seen in so many other stocks that we talked about on this channel. You see the first wave, you see the bubble pop, you see some capitulation, you see it go sideways, and from now I want to show you guys this. So I think, where is it? This right here. So VIXY from the top to the bottom has corrected a full 70%. That's a big one, you guys. I've seen this in Bitcoin before. I've seen this in cannabis before. In bubbles, this is how bubbles work. 70% is a very common retracement during a rally. Okay, so a lot of times you will see a 70% retracement. After that 70% retracement is complete, you will see it regain steam and start its second wave. So I do think that with VIXY, we are starting our second wave. I think what's likely to happen is we'll pop up here to like the $35 mark, probably bounce down off of that because it's just been used so many times here as an area of resistance. And I think the fundamentals are just so strong with VIXY because, again, I think the equity markets will see a pullback. And again, you guys, VIXY specifically was built to thrive during times of hardship in the equity markets. So I'm very bullish on this position. I do think, personally, it's very optimistic, but I do think we could see new highs in VIXY if the equity markets do pull back. All right. So that is that, you guys. Of course, I will keep you posted. I think I will make a solo episode, a solo video dedicated to the VIX and VIXY, explaining volatility, explaining what the VIX is, the CBOE volatility index. Because again, I think it will do extremely well over the coming weeks, months, however long we see a pullback in the markets. But I'm excited to talk to you guys about this more. Again, I just want to put it on your radar for now. And I hope you guys enjoyed this. I hope you guys got some value from this. Please let me know what stocks you guys are looking forward to next week, what you're trading right now, what you think about the equity markets. Do you think they're going to correct? Do you think this is just a bump in the road? Do you think they're going to continue rallying? Fed's printing, obviously the Fed printing will always encourage more movement in the equity markets. But again, you guys, I'll say this one more time. If we do see a bounce up, if we see some green in the equity indices tomorrow and across the tech sector, I'm doubling down on some of my puts. I will tell you that. Okay, so we'll call it there, you guys. Once again, if you do want to know exactly how I'm trading this market coming into this next week and however long you choose to stick around, Complete Portfolio Daily Newsletter first, link in the description. I appreciate it if you check it out. And again, you get more real-time updates from me. So I do send out the newsletter talking about just real-time thoughts during actual market hours. So it's just real-time thoughts for myself if you're interested. And again, I appreciate it if you do. It's a good way to support me if you appreciate what I do here on the YouTube channel and get some good content. At least I do my best to make it good content for yourself in the process. Okay, so I appreciate you guys. Once again, I look forward to learning from you, to talk and shop with you down below in the comments. And until next time, you guys, always remember, take action, make waves. Peace. Cheers. Happy Labor Day.